Let's take a look at some information and charts on Synthetix for Brave New Coin. So Synthetix is a mixture of DEX and lending and borrowing protocol. For me, it's more of a lending and borrowing protocol, which initially had single collateral being SNX, the token. Great idea, great use case. Unfortunately, how that usually pans out for single collateral loans like that is that if the underlying, that being SNX, declines significantly, users get essentially margin called. And as users get margin called, you see this cascading waterfall effect. Maker DAO ran into this problem initially with ETH as single collateral, and they've since added multiple different types of collateral, multi-collateral loans. SNX, I believe, has recently added ETH as collateral as well. We'll take a look at that. That's the basic idea. You know, you send SNX to the contract, and you can turn it into any other type of synthetic. Now, originally, they had many different types of synthetics. They had inverse synthetics as well, meaning the inverse synths, as they're called, tracked the decline of price rather than the rise of price. Those have been removed. They had synthetic stocks at one point, which, unless you're registered with the SEC, is just a giant no-no for US regulators. Currently, they basically just have what Tether does, or what most stablecoins would do, which is synthetic Forex stuff, and then a few synthetic crypto things, as well as a DeFi synthetic. And just to reiterate, the issues with the SEC and synthetic stock stuff, this is recently November 12th. Mirror protocol, M assets. Mirror is basically the equivalent of Synthetix on Terra Luna, Terraform Labs here. And the SEC went after Do Kwon for this exact thing. Many months ago, this is July, Uni announced that they were delisting several assets, many of them synths, but specifically, if we look at the list, it was a lot of synthetic stocks there from Synthetix, as well as inverse synths also from Synthetix. So this list that the Uni delisted was largely comprised of Synthetix. You can even see mirrored stuff here. I don't know if this is mirror protocol at the time, but that's just a giant red flag for regulators if you're not registered with them. Right or wrong, decentralized or not, they're going to come after you. We saw it with one broker. We saw it with anything else that's ever existed like that. I wanted to show the stats page for Synthetix to break down what's going on here, but I can't because it's in maintenance mode apparently. We can look at the debt pool, which shows you where the synthetics are comprised or how much is in each pool. And I believe this is negative because negatives mean that short positions are required to hedge. I believe this is negative because ETH is the collateral, but it's hard for me to tell. I'm assuming it is because there are no inverse synths anymore. Typically, if you saw an inverse number or negative, that means that people were tracking inverse synths. So I don't really know how to interpret this exactly, but it looks like a lot of it is, a lot of the collateral being used is currently ETH, 36%, and then the rest of this is all Synthetix, I'm assuming. Again, I don't know because they don't break that down for me unless I'm just not understanding here. But so it looks like 36% of it potentially is ETH as collateral, and then the rest of this would be Synthetix as collateral, but I'm not entirely sure. Their whole UI needs a redesign. They have talked about this in the past. They had some UI hackathon or something, but that hasn't changed anything yet. This was many, many months ago. I don't really know what came out of that. They do have staking. They do have layer 2. I don't think many people are necessarily paying attention to any of that stuff. This is stakingrewards.com as far as the breakdown for the expected adjusted reward. I don't think this is correct, but if it is, obviously it's not advantageous to stake your SNX. I'm assuming this is just missing values, hopefully, but it looks like 49% of the network is being staked. If we look at TVL across everything and we scroll down here, try to find Synthetix, I believe it is, here it is, 32 now. It's pretty far down. They still have 1.32 billion. They're on layer 2. You can see this fairly large decline in collateral recently. Now, I wish TVL mattered in that you could say, oh, TVL is declining, price should decline, or TVL is rising, price should rise. To some degree, that's true, but not entirely. And we can break this down and look at ETH collateral. That's all the way down. This isn't notional, this is in ETH, so a pretty far decline. You can see SNX, they break it down here for you. Both SNX and ETH since November 11th have declined significantly. That's certainly not a good thing. You can't say it's just completely bearish on its face, but certainly not bullish. And then seeing the Ethereum versus Optimism split is interesting too. This is declining on ETH, also on Optimism. So it looks like in general, people are souring on the idea of using SNX on layer 1 or layer 2. Contract interactions declining slightly since a month ago. Users kind of flat and declining. So not bullish on its face in any regard. Here's DEX trading volume. And if we try to find Synthetix, it's in this invisible slice over here. Most of this is Uni, 1-inch, Sushi, 0x curve. And again, Synthetix, it's just, I don't think it's unique enough at this point. They tried the Reg Arb angle, and that hasn't worked out so well for them. At least down the road, maybe early on it worked out. But now that we're not in the wild, wild west anymore, Synthetix is going to have some soul searching and fact finding to do here as far as what they're going to be. Here they are in the yellow slice down here. Just, I'm not going to say irrelevant, but you could say that they're irrelevant in the grand scheme of things based on volume relative to their competitors. Their value add was really Synthetix stocks and inverse Synthetix, which both aren't in the game anymore. Otherwise, you might as well use Maker Comp Aave for lending and borrowing. I mean, that's just my opinion, obviously, but that's the way I see it. If we look at market cap versus annualized revenue, Synthetix up here on the wrong end of the spectrum, they have a 58x market cap per revenue ratio. Sushi down here at the bottom, 2 times market cap per revenue annualized. Now, I wish this mattered, right? Because this would say, oh, Sushi's super bullish. Should be. Uni, Comp, Aave, these are all things that should be more bullish than everything else on the right side of the curve, unless I just misunderstand PE ratios, but it makes sense. If your market cap isn't several multiples greater than your revenue, then that's either fairly priced or relatively bullish, whereas Synthetix just isn't bringing in revenue because fewer and fewer people are minting or using SNX, period. So that's certainly, it isn't bullish, but it isn't as bearish as you'd think, considering none of this stuff matters really for price, unfortunately. Transaction counts effectively at all-time lows. I mean, this is partially ETH's fault because ETH fees are so high, but Synthetix, just the usability of it, as far as use cases are concerned, dwindling along with transaction counts, that makes sense. Average transaction values in the fill, green there, have been rising along with ETH fees, which makes sense. As fees go higher, you expect 0 microtransactions essentially because it doesn't make sense to send them. If we look at active addresses in the fill here, not a bullish picture by any means. So this matches price pretty closely. We saw a bump in on-chain activity in January, February, and ever since then, just death. Absolute devastation. This could be all-time lows for, all right, it's not all-time lows, but it is down from 4,000 to almost 500 per day, active addresses. Not something you're going to want to see on anything that you are bullish on, certainly. NVT ratio, I don't think is super relevant, but it is declining, which means market cap is falling greater than on-chain activity, just to try to normalize what's going on here. Although on-chain activity looks poor relative to market cap, on-chain activity is either rising or flat as market cap is falling. If we look at MVRV, which is another market cap versus on-chain activity metric, these should align with highs in price. For most of DeFi, that is not the case. Certainly not the case here. This is just nonsensical. It's just nonstop falling here. Currently at 0.4, which is incredibly low for anything. So it'll be interesting if this is the low in a month or two, if we look back on this and say, you know, MVRV was below 0.5, which for most coins is a pretty good buying opportunity. It means that, much like NVT declining, on-chain activity is much greater than market cap here, despite on-chain activity being virtually nothing. This sort of normalizes transaction sizes rather than just absolute value of the number of active addresses and transactions. The problem with MVRV on SNX here is that it's never made sense at the highs. So to say it's going to make sense at the lows, you kind of lost me. It did make sense here, but that's an N of 1. I just think we need more data on DeFi. We need like a year or two more to use this confidently. But in any other coin, I'd say, yeah, anything below 0.5 is a buy. Anything below 0.4 is certainly a buy. It'll be interesting to see how low this goes as price dwindles lower. Here's SNX on Google Trends, just like active addresses and transaction counts, just nonstop lows here. Nothing too out of the ordinary considering price is also declining. Flipping gears to technicals, this is SNX USDT on KuCoin. They have the oldest amount of data, pre-2019 here. I wouldn't use them for anything else. Volume on KuCoin is suspect, to say the least. Goosed, as I like to say. Fake is another way to put it. So keep that in mind. But it's important to look at charts objectively and say, okay, there was clearly a multi-year trend channel here. Are we still in that trend channel? Yes or no? It's binary, right? I don't care your feelings on SNX. You may think it's the next best thing since sliced bread. Good people at SNX, whatever. Doesn't matter. Is this in the trend channel? No. Is the expectation still bullish? No. Is it in a new trend channel? Yeah, it is. And interestingly, this thing death crossed on the 5200 just as it was exiting this trend channel. So all this stuff sort of tells you the same thing, but even if you don't know TA, you can just say, oh, there's a channel here. It's pretty clear. Link was the same. And now we're in a new trend channel. It doesn't mean this trend channel is going to last forever. Although in some coins, it's lasted multiple years, which I'll look at in a second. But this is why pitchforks, I use pitchforks at all. You know, they give you an idea of, are we still on track rate of change wise? Currently SNX is in a downward pitchfork. Does this mean it's going to go sub $1? No, it just means this is the channel I'm going to watch as early as this is. You know, it hasn't filled in this channel. It isn't multi-year. We can't say it's ping-ponged up and down. But for starters, this is looking pretty realistic. How this works is price will want to live in the midline of this pitchfork, and it'll want to bounce up from the lows, down from the highs, and just continue until we break out of that. How this looks depends on a few factors as far as breaking out of this, but here's EOS. This just broke out sideways, right? But it did live in the midline, did bounce here, lived in the midline, bounced down here, and finally just went out sideways. It doesn't necessarily mean that it's going to have bullish momentum. It just means that the bearish momentum is done. So you're looking for something like this on SNX, and then here's, if you're bullish, and then here's Link, which is basically the same chart as SNX. You have this multi-year channel, broke down below continuously, and that's just kind of it. You know, the expectations are gone for any sort of bullishness TA-wise. And then Zcash, this is a multi-year downward pitchfork against BTC. All it is a trend channel. Yeah, it's Zcash. Yeah, fundamentally, I'm extremely bearish on it, but the chart will tell you when things look bullish, right? I don't have to think about Zcash fundamentally at all. I could just look at the TA and say, yeah, it's lived here most of its life. All of a sudden, it's not living there. All of a sudden, things are looking slightly better, slightly less bearish. And then you can change your expectations accordingly. So if you're bullish SNX, you want to hope it doesn't live in a multi-year downtrending channel. Ever since this death cross, it's struggled to make highs and just easily made lows. And that's just a hallmark of bearishness or a bearish trend. Now, it had a chance. It had ascending triangle, had a chance to cross bullish again, had a bunch of volume here, just did not break up. Now, at this point, it's parabolic downside, pretty far away from the 200, pretty far away from the 50, working on a bull div on volume and RSI. I don't think it's as easy of a sell as it was at 10, but it's certainly not bullish. And going back to 2 or less, certainly a possibility over multiple months. I wouldn't expect it to just rocket there now. But bullishness is 404 not found on this chart, as well as the cloud, which clearly shows you since September. You know, I mean, it hasn't been above the cloud since May, but it tried in August, September, tried in November, but ultimately did not get above anything. This is one of the reasons I use the cloud. It's binary. Is it bullish? Is it bearish? Boom. That's all I need to know. I know this in 10 seconds or less, just pulling up this chart. Yeah, it's bearish. Okay. I know what to do, right? You don't buy this unless it's a chart pattern or a div or something, which isn't the case yet. Div's the first step. If you get div plus chart pattern, that's ideal. You know, div here with falling wedge or something. That's what you want to see, but there's nothing. You could say this is oversold, but that's not going to save you. The same thing with the SNX-BTC chart. Is there a multi-month div here? Yeah. Are we at the previous consolidation range? Yeah. Do we have a chart pattern? Yeah. But are you really going to buy this here? Are you going to step in? I don't know. I don't know. This falling wedge psi thing, you know, you'd like to hope that the div plays out, but seeing the USD chart does not give me hope for this chart. I think playing the long side of this is not completely incorrect. It's just a high risk because of the USD chart looking the way it does. I think in a vacuum, this does want to bounce based on divs, based on chart pattern, probably to like, you know, the underside of this volume resistance level around 22K sats or so. But that is a risky trade. I guess you'd long somewhere in here, somewhere in the previous range with a stop loss below the previous range consolidation. That's certainly reasonable. Or you just wait for a pattern to emerge here. You let another month or two go by, looking for W double bottom, Adam Eve, inverted head and shoulders, anything, right? You clearly have a pattern here that looks like it's about to puke out the lows. So I think waiting another month or two is certainly reasonable into Q1 2022. And against ETH, this thing has just been absolute death. Now, if you would have longed this div at the previous consolidation, you likely would have been stopped out using the same logic I just argued here, but that's fine. I mean, that's part of trading. You would have gotten stopped out at around 003, and it would have saved you from all this downside. Next stop is anywhere in this volume level, even though this is KuCoin. I think, yeah, it's KuCoin. You can't really trust the volume back here, but this is the previous consolidation zone. So both fundamentals and technicals for SNX really aligning in the bearish sense. Sure, it's oversold, but their use cases are drying up as regulations are coming a knocking. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.